It's time to get aggressive. It's time to follow up. It's time to know your buy box. It's time to get creative. It's offer 50, 40, 10, seller financing. All the stuff we've been talking about the last 6 months, it's time to write great deals. Don't pay list price, get seller credits, rate buy downs, whatever you can. And as always, you have to know your market. The last housing bull, Mark ZANDI, has gone negative. Yes, folks, it looks like Mark ZANDI sent out a couple of tweets over the weekend, basically saying the housing market is sending off a red flag and it's all bad from here. Mark ZANDI is saying home sales, home building, and even home prices are set up to slump as rates stay close to 7%. I actually look at this as yet another good sign. Oftentimes when housing bulls, or frankly any bulls, finally give up, it's actually a sign that the bottom is near. In fact, Mark ZANDI going negative actually makes me feel even more positive about my call that August will be the end of the housing market recession/depression. Now remember, just because August is the bottom and that September 2025 will be better than 24 and even 23 doesn't mean it's a rip-roaring market. Some of you are misunderstanding what I'm saying. I am saying that September 2025 will mark the first month of positive existing home sales, aka transactions, and then we are on a multi-year journey back to 5.5 million. This will not be a V-shaped recovery. But again, the fact that Mark ZANDI, one of the last housing bulls, is now a bear makes me feel really good. Why? Well, because we've been in a housing recession, depression for 3+ years. You and I have been talking about this since I called for a 40% crash, and it happened. Now, as we stay in this quagmire longer and longer, people like Mark are giving up. To me, that is the sign that we are almost done. Again, July and August will not be fun. They will be bad numbers, but at least in my opinion, it's almost over. So pretty cool to see. What does this mean for you and I? Well, it's really simple. It's time to get aggressive. It's time to follow up. It's time to know your buy box. It's time to get creative. It's offer 50, 40, 10, seller financing. All the stuff we've been talking about the last 6 months, it's time to write great deals. Don't pay list price. Get seller credits, rate buy downs, whatever you can. And as always, you have to know your market. As we've talked about for quite a while, the Northeast is still hot. The Midwest, North Midwest, still hot, but at least 70% of the country is in a buyer's market. Interesting note from Resi Club. Again, shout out Lance Lambert for all this amazing housing data. Says that home builders are seeing a spike in all cash transactions. Interesting. In 2019, only 9% of purchases were all cash. In 2024, 26% were all cash. Now, how could that be? Well, one guess, and just one guess looking at the data, I'm suspecting a lot of baby boomers are selling and they are buying their next new home in cash. Again, that is a wild guess. I don't know if anybody has the data, but I think that's one reason it's gone from 9 to 26%. We've got a lot of Fed speak to talk about. Again, we'll talk about Christopher Waller, Goolsbee, Daly, and even Hammock. So we'll go through that. We'll go through it the order I read them. Christopher Waller says the Fed can resume cutting rates this month. That will be very interesting. Tomorrow we get CPI. Remember, CPI is expected to go up 0.3%, up to 2.7, I think it was, if memory serves, from 2.4 to 2.7. CPI headline we will see tomorrow. Tomorrow's data will be market moving, both for stocks and interest rates. If CPI comes in soft like it did last month, a July rate cut is absolutely on the table. if it comes in at 0.3 or higher, hard for me to see chances of a July rate cut. You can't be cutting rates when inflation jumps to 3.6% annualized. That's probably not a good look. Plus, remember, August next month could be equally bad. And then we've got multiple months. So again, this will not be a surprise to you on this channel. We have been calling out July and August for 6 months. It's just how the base effect is calculated. It is now here. It does get better September, October, November, December, but we've got to get through these 2 months. So tomorrow we shall see a light or soft CPI. I think Christopher Waller is correct. July rate cut on the table. If not, hard for me to see a July rate cut. How about Fed President Goolsbee? Talk about being on the other side of Christopher Waller. Goolsbee said, a few more months of good inflation data could persuade me we are on the golden path. Goolsbee also said, I'll be nervous if prices start rising again. Again, that could happen as soon as tomorrow. A new round of tariffs makes it messy to say how the economy is doing. What is he referring to there? He's referring to the EU. He's referring to Canada, Mexico, Japan, South Korea. All of these new tariff letters that President Trump has sent out is causing even more consternation with the Fed. Finally, new tariff threats could delay rate cuts. The Fed has been very clear. Even Powell has been very clear. Without tariffs, we would be cutting interest rates. Fed President Daly, I am thinking about rate cuts in the fall, i.e. September, not July. Fed President Daly also said, I see 2 cuts in 2025 as likely. Most people at this point are talking September and December for those 2 rate cuts. Fed President Waller out again talking about stable coins to introduce more competition to the payment system. Think Visa, MasterCard, things of that nature. They are just another payment system, according to Fed President Waller. I actually think stable coins will have a surprising impact on interest rates. What do I mean by that? If I understand how the stable coins are going to be put together, they are going to be very, very quickly, the largest buyers of U.S. Treasuries. In fact, I think stablecoin buyers could bail out the Fed and help lower rates as they consume Treasuries hand over fist. We shall see how that goes. One more Fed president talking. We got Fed President Hammack. If you see economy weaken, of course we will respond. Well, thank you very much. We don't know if the economy will boom later this year. This is talks of the big, beautiful bill, tariff uncertainty, things of that nature. Again, saying things might get hot from here. Many business plans are on pause amid uncertainty. I couldn't agree with that more. We called and talked about that for 6 months. It does feel like it's lifting, but it is certainly still there. And all of these new tariff letters, including EU and Mexico over the weekend, does it make it any better? So we will keep watching that. And then finally, I see an economy that is really healthy. Ooh, really healthy? Is that what you want to say? I'm not sure if I would agree with that. As for earnings season, we do start tomorrow with the big banks. We've got Wells Fargo, JP Morgan, and Citigroup, followed by Wednesday, Goldman Sachs, Bank of America, and Morgan Stanley. Thursday, we will get our first retail view with PepsiCo. And then Friday, we will get American Express. I do want to shout out our school community, specifically Jared did an accountability group the other day. Just to give you a flavor of things we talked about, they talked about sub 2, buy box, Coach Carson, DSCR versus conventional loans, that and much more. Remember, when you join school, you now have 7 accountability groups. Find the group that matches your needs and the timelines. We got ladies of all around, out-of-state investing, real estate agents, brokers, lots to choose from. Get in there, hold yourself accountable, get around others. Also, we had 4 people join school yesterday. Gene, Christopher, even Cody Davis. Yes, folks, Cody Davis joined yesterday. If you're in our school community and you want to connect with Cody, he's now there. You can just direct message him. And also Kevin. So thanks, Kevin, also for joining. What else do we got here? I think that might be it for the day, folks. Again, folks, don't forget, if you are a landlord, one of your most expensive things to do, and frankly, the one that is increasing the most, is insurance. Insurance steadily is landlord insurance. Again, if you have a quote coming up, get one of those non-renewal notice, whatever you like. Go ahead and reach out to the link in the description. Steadily can give you an answer in a couple of minutes. And again, everybody should have a plan B, and everybody in this market should be getting quotes. They have saved me upwards of $1,000 on a fourplex, as I've said. Also, somebody replied yesterday with an $1,800 savings. Again, sometimes it's cheaper, sometimes it's better, sometimes it's both. Give them a shot, see what happens, and hey, if it's not, good news. You can stay where you are. Folks, have an amazing day. Take care. Later.